I should be. Testing, just testing the mic. Okay. Hi everyone, I'm Isaac. I'm a price action trader following Al Brooks and studying the Al Brooks BTC trading course. I am not a teacher. I am just uploading my personal journal to check and review and improve my analysis of the futures market, specifically S&P, mini or micro. I am trading the micros right now. I'm uploading live streaming for the third time because I want to work on how long I do these. So I just want to get right to it without wasting too much time. So this is for Thursday, May the 7th, 2026. I am live streaming this on the weekend, Saturday, May 9th, but we will look over just 2 days back on Thursday. Okay, so look in the bottom left here. Start from the top with the monthly chart. Lots of bull bars. Went sideways a bit, came down, found support. Found buyers at support and nice bull bar up there last month. That was April. So good for the bulls. Weekly chart. Nice bear move down after this channel. But bulls came in quite strong. Steeper than the bears, I think. So good case for the bulls. Yep. Really siding with the bulls here. Here's the daily ETH/Globex. And by the way, just one more time before I forget, I expect the viewers to know the terminology I'm using. So if you're studying Al Brooks, or if you're an Al Brooks, if you're in the Al Brooks trading group, then you understand what I'm saying. Okay, so here is daily ETH. Nice bull move up. Not very good on the part of the bears. They got too much work to do to make this go sideways. Okay, daily RTH. Gaps. Gap here. Gap here. Went sideways. Retested the support of this over to the left. See? Came up. This is for Thursday, so ignore the final bar. That's Friday. Look at this bear bar here. Found buyers above. Tried to come down. Bulls pushed back. Created a tail or a candle wick underneath. So weakened the bear case. Here is the 60-minute RTH. Again, we'll ignore these Friday bars. Again, 60-minute bars. RTH. Okay, gap here. So it's looking good for the bulls. It became a trading range. Today made this more of a trading range. So that was Thursday here. Okay. Here is the 15-minute ETH or Globex. After Wednesday, kind of went into a trading range. And then market opened here. Couldn't break above the high of this range. Instead, broke below the low of that range. Just very quick here. Yep, right here. Found buyers. Maybe found some bounce here around this area where there was a lot of bull bars going up, but still came down further before going sideways. Okay, and now here's the 5-minute chart. So normally I try to do the bar by bar analysis the way Brad Wolf does it. But I'm finding that takes too much time and I end up analyzing too much. So I'm just gonna have the whole chart right out here in front and we'll analyze it like that. I know it's not the best way to improve, to test your analysis, but just for the sake of time, we'll do it this way. Okay, so I have the bars numbered here, and let me just erase that. This was Wednesday. Wednesday we had a gap up, and you can see that also on here, this bar here. Again, ignoring the Friday bar. It's Thursday, Wednesday, gap up, nice bull bar up, and that's what we got here. Started off as kind of a range. Had 3 pushes down, 1, 2, 3, wedge bottom, reversed, and went further up. So trended up into the close. And here we are at bar 1 for today, Thursday, May the 7th. Small gap up, and it's rejected on the first bar. And that tells me that likely, even if we do go up, we'll still have a nice bear move. Because we have bears showing a rejection of a gap. So we could see here a few things I noticed on the open. Again, most traders should stay out on the first 6 to 12 bars. Having said that, I did notice that stop order bears got a 1R if they sold below bar 1. And I think that made a strong case for them. Let me just measure this. Okay. Okay, so 1R, but then the profit taking, just a lot of profit taking. So on the bar 5, that being a bull bar like that instead of a doji made me think that they're not, the bears are not going for a 2R or 1.5R even, probably not. So I thought it's more likely this will come up. Now, of course, there was a doji there, so sellers above bar 5 naturally after these bear bars, but the market still continued up. Bulls made their way upwards towards yesterday's high, and just to remind everyone, yes, I have the indicator for prior day open, high, low, close. And also this blue dotted line is the current day's open. Okay. So anyways, we got back to here. Went a bit sideways. Yeah, I mean, buyers below, sellers above. But then the breakout, bulls attempt to break out here. And what are they going for exactly? Well, I think it was based off of low of bar 5 to high of bar 1, trying to get out of that range. They just got to around a little bit past the 1.5, sorry, half R. Okay, so that's the half R. And bear started to carry it back down. Excuse me. There was a trend line break. Okay. Trend line break. Retested that trend line. Came down further. And also, yes, just before that, sure, the buyers were still trying to hold strong here. You know, bar 24, this lot of wick there. They were, the market was coming back to the 50% of of this, 50% of this measure. But at the same time, if the bulls got this move, if you include the 150, that it says 150, but that was the 50% R, so half R. So if we were to actually go to the top, so the high of bar 19, so include that. This pullback was more than 50%. In fact, it was pretty close to 75%. So at that point, plus breaking the trend lines, I mean, if you draw Roman here, you draw from here, I mean, it was that one hadn't broken yet. Still, the bull case was weakening there, and the bears were getting their move down. So then we got this surprise bar 30 and 31. So that is creating a new low of the day, breaking below bar 5. Just breaking below that, but wasn't the greatest follow through. Still came down. And then for anyone who missed that move, the market came back up for them, so they could get in again. Tested this low, which was now acting as resistance, and then coming down. Now, anyone who sold above bar 34, because look at this move down. I mean, who wouldn't sell above bar 34? But then if they got caught, well, then they could get out, break even here. If they scaled in up here, they could get out down here. But to be honest, I mean, this was probably going further down anyways. So small pause there before continuing. And if we have the measured move based off of here, that is measuring bars 30 and 31. Then this was the 1R here. You can see it was kind of acting as support, but then or at least the bulls were trying to make that support, but likely wasn't happening. And no, it didn't happen. We actually did get 2R. Now, one thing I noticed was I was looking at the daily bar here. If we look back down at the lower left, so that bear bar there, you can see now it has a lot of candlewick underneath. But at the time, candlewick was very small. The bear body was bigger. And so I mean, we found sellers above Wednesday's high. You could see that when we went above here. Then we come crashing down here. I thought the bears would have loved to have an outside down bar. So just go down to here. This is previous day's open, and just a little bit wick underneath, and you get previous day's low, which you can see here on the lower left daily chart. That's a nice bull bar there. I think the bears were really trying to get below there. Now, as you can see, they didn't. And I think one sign of that was just the fact that the market kept going down, then pull back, down, then pull back. goes down again powerfully, but still can't break here. So I think, definitely by bar 71, 72, it was established, to me, it was established that, yeah, that support's going to hold. So, I mean, by then we're more sideways. And so I think that was a good chance for the bulls to take this market up, at least within this trading range. Obviously nobody or most retail traders aren't really, or they shouldn't be entering a trade after bar 72. But having said that, this support was clearly holding, so I thought the market was going to go up further, and sure enough, it did. And things got really crazy at the end of the day. The movements of these bars were when it was live. It was definitely crazy. I think the institutional traders were stepping in, trying to influence the final look of the daily bar. Well, that is what happens. So I think the bears were trying to come down again, create an outside down bar on the daily chart, while the bulls were trying to prevent that and actually create as much candle wick on the bottom as possible. Just in context of this support holding, and in context of the daily chart looking the way it does, very bullish. I think the probability was higher for the bulls to swoop in and at least undo as much as they could of what the bears did during the day. So, other than that, yeah, I'm not gonna go too much over stop order, like where I thought there were buyers and sellers. I will say that I have this news indicator here. It's little circles, an FOMC member speaking. This one is green, so not really that urgent. Red is the most urgent. That was for next day. Orange is kind of medium. And even though these were not as urgent or not as important news events, they were still FOMC members talking, so I thought something to pay attention to. I don't trade news. The Al Brooks trading style does not trade news. It's just reading price action, but still we keep the news in mind in case maybe we need to stay out. And of course, you never know if President Trump is going to say something. Love him or hate him. I'm not saying any opinions, but sometimes he says something and the market goes crazy. So you got to watch out for that as well. Okay, that's enough for now. I'm going to stop it here, and any feedback is welcome. Just stay on topic, stay positive, and let's improve together and let's get at it. So I will see you guys the next time. So again, this was my personal review of the S&P Futures, either mini or micro, for Thursday, May 7th, 2026.